As we mentioned earlier, it is taking place in Brazil. Leaders from Brazil, Russia, India, China, South Africa are all discussing important issues. All this week, we are taking this opportunity to shine a light on their economies. Now, the second letter in the word BRICS is R for Russia. Russia's economy is the third largest among the group. It ranks 8th around the world. And when it was the first BRICS summit was held in 2008, Russia was enjoying a more than 5% growth rate. And that has since slowed considerably. This year, the World Bank is expecting just 0.5% growth. So we want to ask the question, why is this happening? Well, let's first begin with the pros and cons of the Russian economy. First, the bright spots. Russia is considered a high-income country by the World Bank, and that means it has developed into a mature economy by international standards. A big reason for that is oil and gas. No surprise. Russia is among the largest energy exporters in the world, plus strong domestic consumption, easy credit, growing wages. That's all kept the economy moving right along. But Russia has its challenges. Western sanctions have taken a bite out of growth. The country's former finance minister says that could shave 1.5% off growth alone. And the currency is not well. The ruble is one of the worst performing in the emerging markets this year. And investors are voting. They are leaving in droves. $75 billion has left the country this year. Now, housing is also proving to be a big problem there. In fact, in a recent poll of ordinary Russians, affordable housing was ranked as the second biggest economic concern. Rising prices was number one. So, CCTV hit the streets of Moscow to find out where these people are making this and why these people are making real estate such a big problem.
No, we survived through the 90s when annual inflation was 1,000%. So now we do feel it, but I can't say it's catastrophic. Yes, it's a bit harder. Yes, it's more difficult. Our salaries are not growing as fast as inflation. But nevertheless, after surviving the 90s, nothing can scare us.
People will start selling property, and the prices will go down automatically. The prices are way too high right now, especially in Moscow. Moscow is the only city that has jobs in Russia.
Our lives aren't stable. I'm not sure about my tomorrow. Everything changes and the prices are so high. It would take 25 to 30 years to pay everything. And I think to myself, I might be dead by then.
The prices here are always high, so I don't see any point in buying it here.
You can hear some of the concerns about that in Russia. Inflation has a long ways to go, though, from its previous times in crisis when it was 1,000%. But nonetheless, it's still hurting consumers. In June, inflation hit its highest level in 3 years. Russia's central bank there says inflation will hit 6% by the end of this year. Anya Ardayeva reports from Moscow.
As the crisis in Ukraine unfolded during the first quarter of 2014, Russia's currency, the ruble, tumbled around 9% in value. That helped fuel inflation, which accelerated in May to 7.6% from a year earlier, and then climbed to 7.8% in June, well above the Bank of Russia's target inflation rate of 5%.
We've seen the inflation pressure slowly rising from the beginning of the year. Several factors influence that. First of all, the weakening of the ruble against the dollar and the euro. Also, this is an effect from a bad vegetable harvest, which also helped the growing pressure.
The slumping ruble sent Moscow real estate prices soaring, as many property owners in Moscow tie rental contracts to the ruble's exchange rate against the dollar and the euro. Sellers like Katura Dilyasova at the Dragomilevsky market in Moscow say rising rents also drive up the prices they charge.
Of course, the prices are growing if the rent is growing. It's natural. How else can people pay rent? Rent is very, very high in Moscow. If it went down, prices would go down too.
Despite all this, some analysts expect Russia's inflation to come down later in the year.
This is a negative dynamics, and it normally will lead to the slide in authorities' political ratings, but we have to keep in mind that this was a short-term effect, and the real incomes have gone down by about 2.5%. People started consuming less, and now we see that the real income went up after the ruble rate went up.
As the Russian ruble recovers some of its losses, Russian officials insist that the impact of Western sanctions on economic growth has been negligible. However, economic data paints a different picture. By many forecasts, inflation is likely to climb higher in 2014, and Russia's central bank governor Elvira Nabiullina warns that the ruble may sink even further unless Russia stops the capital flight. She expects as much as $100 billion to leave Russia by the end of this year. Anya Ardayeva, CCTV, Moscow.